Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, when I first looked at this chart, I don't know that I would have said that it was that high. I would have said, oh, vol looks like it's on the lower side, but I really don't know how low it is until I really look at it more. And then when you put the lines in, you can see, well, it's not as low as I thought. It's almost in the middle of the range. And an estimate like that can make a big difference in deciding what type of strategy to use. Okay, and we're going to get into the reasons for that. Here's another one. This is on the Swiss franc. All right, and so the first thing we said, we're going to draw the boundaries of the entire implied volatility range of the yellow line. And that ranges from 10 to 25. So the width of the range is 25 minus 10, which is 15 percentage points. Divide that into thirds. So each third is now 5 percentage points wide. And you can see that the Swiss franc is also in that same area as the euro was. And this is not so surprising because the whole market has kind of moved towards lower volatility levels. I mean, the VIX is now under 30, which is somewhat of a shocker. It was a while there it couldn't get under 50. So things have been trending lower. The market has been performing fairly well, and that tends to bring with it calm and lower volatility levels. And as I said, you can pull up a volatility chart on any of the FX options. And you can also change the time frame. We have here, you can view 6 months as well, or even 3 months. And I'll show a few of these. You can see most of the volatilities have been trending lower lately. But depending on how far back you want to go, it may affect what your analysis is. Same thing in technical analysis. Depending on what is your range. Are you looking at daily charts over the last 6 months? Or are you looking at hourly charts over the past month and so forth? Okay, so what I'd like to talk about is what we are doing and what we are not doing. Even though we are coming up with some kind of map, this does not say that the option volatility is either justified or not justified. All I'm saying is, where is it in relation to where it had been? And, it's like a store. I'm not making a judgment call about if a store is located on the right level next to the right stores or it's in the wrong place. I'm just saying I want to know where it is. I want to know how to get there. I want to come up with a plan. So we're not making a judgment about necessarily what's happening now. I don't really care, do I think options are undervalued or overvalued, okay? The market is telling me that this is the price now. I'm making an idea about what I think prices may do in the future, so I want to position myself accordingly. And also, what it does not do is it does not limit implied volatility from going either higher or lower than it had gone in the past. If we were talking about this a year ago, the range would have been much, much smaller. And not only that, I mean, when you see how far some of these the volatilities of some of these products went, I mean, it practically tripled the previous range or more. I mean, it's quite staggering. So you got to keep remembering that just because it used to do this, it doesn't mean that it's going to keep doing this or that it's going to maybe set a new behavior moving forward for an extended period of time. So another question I get is, well, which level of volatility do you want? Do you want it high? Do you want it low? Which one is better? And again, it's not it's not a question I can answer. It's like saying to a carpenter, well, which tool is better, a screwdriver or a hammer? And the carpenter is going to tell you, well, I need both. It depends which one I need, when I need it, depending on the job and what I need to do, what I need to accomplish. So you can't really compare. Okay, and the same thing applies here about implied volatility. It depends on what strategy, or as we say at TradeKing, which play you're going to do. Okay, so just to summarize what we just talked about, we're looking at implied volatility, what it did in the past, and what we think it may do in the future. And actually, I'm going to go back a moment. I just want to make sure I clarify something that I don't think I explained fully. So here we have our thirds, right? This was the Swiss franc here. So what we were saying was that volatility is in this area right now. From what we know about volatility, we said that it tends to move in a wave-like fashion. Okay? So what you're saying is if volatility is down in this area, well, there's probably some type of higher chance that it's going to move higher, that it's not going to go lower. Now, does that mean that it can't go lower? No, it can. But you're just talking about the odds of what you think is going to happen or what might be a likely outcome. If volatility was up in this area, as it was, I would say there's a better chance that volatility will decrease moving forward. However, that doesn't mean it's going to do that the next day. Okay, it's not on any kind of schedule. But again, it's just giving me an idea of what I think volatility will do in the near future. Okay, and so this is going back to the concept of mean reversion and what you're looking for. So if you figure out where you are, you can maybe come up with an idea about where you think it's going. Now, some people will read trends in the volatility lines as well. You can do that. What you need to remember, though, is that as a whole, volatility isn't trending, but that doesn't mean that there aren't market forces that lend itself to volatility trending at certain times. I mean, volatility has been trending lower over the past few months. So just to keep that in mind, yes, you can see trends, but typically it doesn't move in the same kind of way like a stock does, where you can just go on these runs and never come back. Like I said, it tends to be somewhat limited into the range that it fluctuates between. All right, let's go back to where we were. And we said, so IV is fluctuating, and we're making an assumption that it's mean reverting and to determine what we think is going to happen. I'm giving you a simple method here about it being divided into 3 parts. However, there are many other methods that use quartiles, quintiles, or deciles, and that just means dividing it into 4s, 5s, 5 parts, or even 10 parts. You could even divide it into 100 parts, and then that would be called percentiles.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.